Episode of Accounting 101. Judy from Warrandyte has emailed us in with a question. Now, Judy says, my business currently specialises in manufacturing timber doors and is quite successful. However, there is increasing demand for doors with glass panels. If we start manufacturing these, we will need to purchase specialised equipment and hire a glazier to work with the glass. How can I determine the feasibility of this idea?
First of all, let's look at the costs involved. Variable costs are costs that vary in total directly and proportionally with changes in activity level. Thus, if activity increases by 10%, so will total variable costs. In this case, the new glazier is the labour cost, which is direct and variable, because it can be traced to the production of the glass, and the more he or she works, the more he or she then gets paid. Indirect costs cannot be traced to products or services.
Fixed costs remain the same in total regardless of the activity levels of the business. For example, in this case, the rent for the factory would be an example of a fixed cost.
Mixed costs contain both a variable and a fixed element. In this case, specialised equipment could be a mixed cost, as the machines may have a flat service fee and a usage charge.
Perhaps a cost-benefit analysis could be conducted using the high-low method. This looks at total costs at peak production and minimum production levels. This can help the business identify how specific costs respond to changes in business activity.
They could also do a cost, volume, profit analysis, which may help them determine selling prices, product mix, and how to maximise productivity. Management would then report the findings of this analysis in a contribution margin statement.
They could conduct a break-even analysis to determine the number of sales needed to make total revenue equal the total costs.
Based on the results of the break-even analysis, they could determine the contribution margin and the ratio, and thus develop a target profit. This could help them give direction to the organisation and employees.
And that's this week's episode of Accounting 101.